James Hirechek with this week's Autochartist weekly Forex futures and indices market recap for the week ending August 3rd, 2012. The strong close the week ending July 27th in the global stock indices put the E-mini NASDAQ 100 in a position to break out to the upside, making it the stock index to watch on Tuesday, July 30th. You can see here that we had this big finish last week, but the market went sideways for several days, and we just could not get enough momentum to break out through resistance. This was because of the central bank meetings taking place. So traders waited until Friday when the U.S. released its non-farm payrolls report, and it finally gave us that breakout to the upside. Now this trend could continue because not only are we crossing this resistance, but we're also crossing two former tops, which could give the market the momentum to trade as high as 24.50. Now, sentiment shifted late Tuesday as speculators now believe that the European Central Bank would refrain from additional bond purchases. So what this did was it weakened demand for higher risk assets, driving down the commodities, stock indices, and some foreign currencies. Additionally, the Federal Reserve also began its two-day meeting, and traders pared back positions as it waited for the central bank to decide on additional quantitative easing. So this put some pressure on the commodity markets, and we are looking for a possible breakdown in heating oil going into Wednesday's session. You can see that the market did begin a breakout here of this triangle chart pattern, but just did not get the follow through to the downside as we needed, and that's because after Wednesday we started to get a shift back to the upside in terms of investor sentiment. Traders started to become a little bit more bullish, and that stopped the downside momentum. There's not a lot of risk on this trade if it does go back to the upside. But if the fundamentals are shifting and traders believe the economy is getting stronger, then we could see greater demand for energy and oil products. So I'd look at this market as basically a scratch. There's probably better opportunity coming up in something else. Then later in the week we had a sharp rise in supply in the natural gas market. And what this did is it triggered a change in trend to the downside. You could see here that we had a steady uptrend, and then we had this market reach a resistance point of this channel and then sold off sharply. So what we were looking at was the August 2nd chart pattern, and this showed that we had a break of support in the rising wedge chart pattern, and that triggered a sharp break to the downside. We're looking for further downside momentum to trigger a break into 273.38. So that's the way we finished with the natural gas going into the end of the week. Overall, it was a volatile week due to three central bank meetings and the U.S. non-farm payrolls report on Friday. Commodities and foreign currencies rallied sharply after the report, as you can see if we repeat this NASDAQ pattern, and we saw increased demand for higher risk assets. Pressure was on the U.S. dollar and the treasuries, and this could be a sign that traders are turning more optimistic about improving conditions in Europe and the U.S. So if this move in the NASDAQ represents a shift in sentiment, then there's likely to be follow through to the upside. The fear is that traders continue to read the news and read into what the Fed and the central banks are saying and what the economic reports are saying. And in that case, we could just break back into this pattern here and just trade sideways again. But we're hoping for momentum to continue to drive this market higher. This has been James Hirechek with this week's Autochartist weekly Forex futures and indices market recap for the week ending August 3rd, 2012.